Hello, folks. Welcome to Enter the Intel. I am Michael Madison Jr.
And I am Jeff Harrison.
And we are International Intelligence. Tonight, we will be discussing topics of the show which will pertain to current news in the U.S. economy. We will have a bull and bear segment. We will also have a Q&A after the end of the session. Along with that, we will have some phenomenal trades to go with.
All right, let's get right into it. The current news that we have for the evening.
With that current news, last week we had U.S. stocks that finished slightly higher after erasing final gains towards the end of the week, towards the final minutes of trading. And the Nasdaq closed above 4,000 for the first time since September of 2000. The Dow Jones scratched out another high record close, and S&P continues to stay up near its record highs. With that,
pretty strong signal, Michael.
That lets us know that we are in a very, very bullish market as of right now, Jeff.
Yeah.
We've been pretty much been up all year long due to a strong economy. We've had some great numbers, and we continue to grow. We're in this bullish market.
And to the majority of the analysts out there, they pertain to this run as the most hated run on the markets because nobody's on it.
Absolutely.
Everybody's expecting some kind of pullback of maybe 5 to 8% in the markets, and I don't know if we're going to get there.
A lot of times in these markets, what do they tell us? Close your eyes and buy it.
Yeah, buy the all-time highs, folks.
There you go.
Believe it.
Buy the rumor, sell the news.
Right.
If it's going up, let's buy it. With that, going into a little bit more current news. We also had, as a beginning of this week, U.S. stocks held modest gains on Monday. They respected a skin-tight range as the investors took a breather from last Friday's triple-digit rally, and the Dow Jones following a very, very upbeat job market report. So with that, some of the Fed officials, they tried to warn against increased odds against an imminent stimulus tapering as a result of the November payroll data. The stock market regained its footings towards the end of the day, and also today's merger, as of Monday, merger mania, the upbeat China export trade data had helped make the bulls case to let further confirm that we're still in this bullish market. Some of the Federal Reserve's most hawkish members, speaking on Monday, they suggested that the November payroll data is enough ammunition to help the central bank pare its stimulus program. But given that performance of both the stock and bond markets in the face of those recent bullish economic data, investors are already possibly kind of anticipating an inevitable tapering.
Okay. We all know it's around the corner, and most would say that it may be coming in the first quarter of next year is inevitable. And as we can see, some would even say that it's maybe even priced into the market.
A lot of times that's true.
So the retail investor doesn't tend to necessarily get in at the best entry on those runs.
You're never going to get in at the top, and you're never going to get in at the bottom. But I can tell you one thing: International Intelligence can teach you how to get in at the best prices and when to exit and make those fantastic gains. So we can teach you that here at International Intelligence.
I would definitely have to concur with that. Also, last week, consumer confidence index fell to 70.4. Expectations were to rise to 71.2. Meanwhile, new building permits rose around 6.2. That's the highest that we had in the recent 5 years.
Okay.
U.S. price homes also rose 0.7%. This is the lowest gain that we've had since February. I think it's fair to say that the housing economy is slowly but surely regaining its strength, and that is another positive factor for our economy.
That is true. Long as the housing market is steady climbing, we know as the housing market goes, so does the stock market. Or as the stock market goes, so does the housing market. They go hand in hand together. So with that, it helps the overall economy.
Yeah, I definitely agree with. I think we all saw that in the case in 2009.
Absolutely.
Some of the current news that we have from our neighbors across the pond this week. European stock markets rose Monday after gains in Asia over the weekend. China export data signals strong demand for the overall global economy. So also that market, excuse me, that region had a strong start this week.
Yes, it did.
With that information. So as far as Europe and Asia, also Germany data showed a surplus that narrowed a little bit than the expected numbers in October. So that's not good. Exports rose 12.7 in November and will head to maybe around 5.6 that analyst expectations in the end of the year. So we'll see how that ends up. Also, as for today, the FTSE was down around 0.96%. The Nikkei finished up around down 1.12%. Also, the Hang Seng was down 0.06%. Excuse me.
Very, very minimal. As far as across the pond, you had a pullback kind of per se in the European market. I would say just a small pullback, but overall the European market's been pretty strong for the year.
And I would have to agree with you. We also saw that in counter trending today as well. I think the U.S. markets kind of followed through on the downside today, which is a rare case.
And following up on that, going back to back over here in U.S. economy, as far as today. The investors kind of shrugged off the huge gains in initial jobless claims today. We had a number of plus 68,000, which was kind of high. It was more than they were expecting. I think initially they were expecting 325,000. So the stocks they end up closing lower today for their third consecutive day as the concerns tightening upon the Fed monetary policy, which was exacerbated by the strong November retail sales and the buildup in business inventories, both of which were likely to be reflected in the Q4 QDP. It was led by losses in the consumer staples, and the Dow Jones closed again with a triple-digit loss today. So we were down 100 points today. Initially, we towards the end of the day we tapered off and got down to like around cut half the losses, and then we end up pushing right back and going into the end of the day. Right after that, the NASDAQ, however, it erased its earlier losses and closed just barely to the downside, and it was led by gains in Facebook, led by gains in Netflix, and as well as Tesla, all of which ended those three stocks, all of which ended 2.5% higher, 2 to 5% higher on the day. So with the numbers with that, the Dow Jones Industrial Index, it was down 104 points at the end of the day for 0.7% at 15,739. The S&P was down 6 points today for 0.4% at 1775, and the Nasdaq Composite Index was down 5.41 or 0.1% at 39.98.
So it's fair to say we had a pullback kind of a day. So we're going to take a break.
Okay.
Come back with our Bull versus Bear segment and blow your socks off.
Absolutely.
He'll be playing the Bull and I'll be the Bear, and we'll give you our views from both points.
Let's rodeo.
The stock market has enjoyed historic growth over the last few months. Don't miss out on your opportunity to share in the wealth. International Intelligence presents Learn to Trade Live with Tony Laporta, a 34-year veteran of the Chicago Mercantile Exchange and the London International Financial Futures Exchange. Included with the class, 1 month free of Tony Laporta commentary and key pivot points. Call now to reserve your spot for an introductory class on January the 8th or the advanced class with Tony Laporta January the 9th. Call now or find us on the web. Begin your future in financial trading.
Hi, welcome back to Intel. Now we're going to be speaking, we're going to have a little segment called Bull versus Bear. And in this segment, what we do is I give you the reasons why I think this stock is going to be going up, meaning being bullish. And those of you all that don't know some of the terms that we use, feel free to call into International Intelligence, and we will have that number posted for you at the end of the show. But we can teach all of these things. If you fall a little bit behind, don't feel bad. We can teach them and you'll be able to catch right on up. With that, we're going to speak about a company called Tesla.
Tesla, hot stock Tesla. I believe everybody's heard about Tesla.
We all know about it. We all know about it. It's a hot company. It's a hot car. Literally, it's been a hot car.
Literally, it's been on fire.
It's been on fire.
Well,
literally.
Some of my bearish views on the stock and why I would say hold on to such of a bullish sentiment would be, folks, nobody likes to turn on the local news and see maybe their car or their neighbor's brand new car off the lot on fire. Okay, early in October, the Model S caught on fire on the roadside. That video sped through social media like wildfire.
It did,
okay,
it did. But before you say that, let me say this. Hold that thought. We all, I've been down the road, and I travel a lot, and I've seen, coming up and down the highway, I've seen several cars, on fire. So, you're going to have a little bit of setbacks when you produce a phenomenal product. You're going to have some type of setback. So, I understand. Yeah, it was a fire, and it's like you said, it spread through social media.
We can't have that for a new car brand. If you're Tesla, you can't have that.
Well, let me say this. Even with that, the relative weakness in the momentum stocks, it hasn't changed the overall point in which we're in an overall uptrend. Okay, and with that, the Nasdaq is at all-time highs right now. So, and it's being led. One of the leaders is Apple, and behind that, Tesla, as we just spoke about today. So, even though it's down 38% since September 30th, it doesn't change the overall long-term trend of being an uptrend with it. Now that it is way oversold, I think it can start heading back and go and test at its old highs.
Well, I don't know if it's oversold quite yet, Michael. I mean, there are analysts have other concerns of Tesla not being able to maintain the level of automobile deliveries. That's significant to satisfy analysts' concerns and compensate for revenue in streams as well. So,
correct. Well, yeah.
Are we done pulling back yet? Are you a buyer at this price on Tesla?
I was a buyer. I've been a buyer since it was way back at 30. So
Well, everybody's a buyer at the low.
Absolutely. I buy the low, sell the high.
Well, if you've missed this run, what would you have to say to those that
I would
looking
say
to buy?
Right now, Tesla's trading at 147. It pulled back on that news that he was speaking about, and it's been pulling back. It pulled back to around 116 and some change. With that, that created a good buying opportunity because it had shot up to as high as 194. So nothing goes straight up, nothing goes straight down. So it's just created another opportunity for those that have kind of missed it. Hey, that company's steady doing some things. Back on November 22nd, they received some good news from the Consumer Reports indicating that the Model S customer satisfaction scored 99 out of 100. So that's a phenomenal, that's a phenomenal number from the current owners. And that topped the list of all the cars in that annual survey. And that was the highest score the publication has seen in as many years. So, that to me, that lets me know that, hey, we're still coming back, and, it's got some room to, head up.
Okay, I understand your bullish segment and your view from that. But I argue this. I think you can buy Tesla at a better price. And I think the bears are still around the corner. And when I mention bears, that means the short side of the market. That means you're shorting the market. You're expecting the price to go down. Okay? After this news, and we'll see, we are in the retail earnings important section of the year.
Absolutely.
So we will see in the first quarter how they end the year.
Okay.
But I do think you can wait and get in at a better price.
Okay.
On Tesla.
You think so? Well, let me tell you this. Right behind that, on November 22nd, on November 25th, the shares rose 3%. It was possibly due to the interview from AP with the CEO of Tesla, speaking on the expectations that the Model S was going to be cleared in those federal investigations about that fire. So,
there are a couple, so it may take some time.
Yeah, possibly. They had a few fires out there, and that's in anything. When you're building a product, you're going to have a few setbacks, but it's all about how you come back from those setbacks. And if you're able to do that, which I believe that the CEO Elon Musk, he's focused and bringing a good product, and a good green product. And I was recently on a trip in Dallas, and I seen Teslas all over. So they are steady buying the car, and it's it's great for the economy, and it seems like it's going to be great for the overall ecosystem.
Okay. All right, I think we'll have time for another commercial break, and we'll come back with some of our phenomenal trades, some of the hot stocks and picks that we have out there for you.
See you in a minute, folks.
The stock market has enjoyed historic growth over the last few months. Don't miss out on your opportunity to share in the wealth. International Intelligence presents Learn to Trade Live with Tony Laporta, a 34-year veteran of the Chicago Mercantile Exchange and the London International Financial Futures Exchange. Included with the class, 1 month free of Tony Laporta commentary and key pivot points. Call now to reserve your spot for an introductory class on January the 8th or the advanced class with Tony Laporta January the 9th. Call now or find us on the web. Begin your future in financial trading.
Hey folks, welcome back to Enter the Intel. Right now we're going to speak of some of those things that you might want to be able to take advantage of. You know, you start doing a little bit of research into some of these strong companies that are starting to make a move either up or down. And you know, a lot of people don't understand that you can make money in these markets where you can make money on the upside or the downside, being bullish or bearish. And that's what we teach here at International Intelligence. So you know, with these things, you know, you're going to have to do your research, but we'll give you some great ones to look at and maybe take advantage of.
Great.
Okay. On the upside, just this week we had Cisco, a great company. I've dealt with them in the past. They agreed to acquire private food distributor U.S. Foods, and I believe they were going to pay $3.5 excluding debt. And with that, on that news, they were up 10% and they were trading at $37, I believe 62 cents there or thereabout. Stock symbol for that, folks, is SYY, and that's trading on the Dow. So take a look at that. That's a great, strong company. To me, you could be looking at doing something with that to the upside.
Yeah, they've had strong fundamentals for a while, and I think that is a positive move to get the research and
absolutely. Yeah. With if they can pull that together and you know everything's approved. U.S. Foods is a great company. I've dealt with both, and I think pulled together. I think that you know it may be one big bull. Big bull.
Right.
So I think it should do well.
Well, a little bit on our downside movers that we have for today. Keep your eyes out for Lane Christensen Company. It reported $216 million in Q3. Q3 reports, down from $218 million. Analysts consist of $244 million on Capital IQ, pre-tax loss around 99 cents on the dollar. Okay, it's around $38 per share right now, down 4.5% at 15.2.
Wow. That's something that you definitely want to get on that and ride it down.
Yeah, you definitely want to look and find a definite entry to the downside.
Absolutely. And folks, let me stress this. Right now we're in a bullish market, and you know everybody likes when the market's going straight up. But I'm not bearish. I'm not bullish. I'm a realist. I'm going to take advantage of both sides, you know, and that's what you want to be able to do. You want to be able to take advantage of those momentum movers to the upside or to the downside. So
you want to be able to identify both markets and capitalize on the opportunity when it presents itself.
Absolutely. And International Intelligence will definitely teach you that. Another one to the upside, great company, Highway Holding Corporation. They had received 3 tooling orders this week designed to produce plastic components for printers offered by a leading U.S. printer company, and they were up 25%. That's a great return in any market, folks. 25% return. If you could have that for the year, some of us wouldn't even have to work, but that'd be a great retirement. They were up 25%, and they were trading at $3.30. So that's something that some of those novice investors can something that they can look to take advantage of, because it's not an overpriced stock right now.
Right, it's one that you can perhaps maybe buy into and put it in the back of your portfolio.
Absolutely.
Yeah, agree.
Very, very good point.
Agree.
Well said.
Another one to the downside that we have, folks, is Take-Two Interactive. The stock symbol is TTWO. And it fell 5.5% on news that 12 million shares held by Icon Group, run by investor Carl Icahn, were brought back. So this, in fact, affecting the stock and pulling it back a little bit. I believe it's trading around $16.50 around right now. I would look to short to the short side on any rally that we can get. Any rally to the upside, I would look to try to get in and try to sell a couple shares of it.
Okay. And folks, let me let you know this: none of these are by any means of recommendation. There are to be construed as recommendations.
Correct.
These are all just things for you all to take a look at. So don't take them and say, "Hey, you told me this," or "Hey, you said this." Don't look at it that way. We all have to learn to do our own research. And I think that's the only way. You have to do your due diligence in anything that you decide to trade, or anything that you're looking to make an investment in.
Correct.
So you have to do your due diligence.
Correct.
One more to the upside. Hudson Technology, stock symbol HDSN. Again, that's HDSN. The EPA issued a proposed ruling this week pertaining to the alliances of virgin production of the primary R22, which a lot of you, if you don't know, that's a refrigerant which is basically known in residential and mostly known for residential and commercial, and they were approved for that for 2015 to 2019. The proposed ruling sets the schedule for the final stage phase out of the R22, and the reason they're doing that is because the R22 was known to have shown to deplete the ozone layer, and with that it was up 40%, and it was trading at $3.59.
Very, very strong, very strong. Also, we want to let you know, if you have any questions for us here at Enter the Intel that you may be curious about, or you want to find out some information, please type them in for us, and over the commercial break we'll do our due diligence in doing the research, and we'll have a Q&A segment here coming up shortly. Okay.
One more, let's see. I have one more for you gentlemen out there, all you guys out there. I have a great one. If you want to stay in the good graces of if you want to stay in the great graces of your wife or significant other, I would recommend this. Give the gift that definitely keeps on giving. Company did great last week. Tiffany, they reported earnings. They reported Q3 earnings, and they rallied 8.7% after better than expected quarter earnings. So take a look at Tiffany. You can't go wrong. You get your wife some of that Tiffany, buy her the stock. She can go buy as much jewelry as she wants to buy. So that's definitely a gift that keeps on giving, if I would say so myself.
Agreed, agreed. We'll go into one more commercial break here, and we'll be back to you.
The stock market has enjoyed historic growth over the last few months. Don't miss out on your opportunity to share in the wealth. International Intelligence presents Learn to Trade Live with Tony Laporta, a 34-year veteran of the Chicago Mercantile Exchange and the London International Financial Futures Exchange. Included with the class, 1 month free of Tony Laporta commentary and key pivot points. Call now to reserve your spot for an introductory class on January the 8th or the advanced class with Tony Laporta January the 9th. Call now or find us on the web. Begin your future in financial trading.
Hi folks, welcome back. With that, with everything being said, let's take advantage of these great, what's been known as a Santa Claus rally. You know, right now we're at that end of year Santa Claus rally. Hey, let's all celebrate and have a great Merry Christmas.
Ho, ho, ho. Heyday.
Absolutely, absolutely. We have some great opportunities coming up in the month of January. We're offering some intro to futures classes on January the 8th, and then we also have a class for the advanced futures with Tony Laporta on January 9th.
Tony Laporta, 34-year veteran in the Chicago Mercantile Exchange, also over there in the London Stock Exchange. The man knows what he's talking about. Visit our website and sign up. Don't end the year in the negative.
And this will be Enter the Intel signing off. Thank you very much. Y'all have a wonderful, wonderful evening.